Happy Thanksgiving week, Warriors. Hope everyone had a good weekend. You ever think about the word Thanksgiving? You know, we all think it's really about being grateful and being thankful, but that's the first part of it. Giving is the second part of the word of the holiday, and that's what we're about to do. Maybe you guys need to think about that it's more than just being grateful and thankful, but there's a giving part to it. And I'll tell you something that you don't give without getting. Okay. I know all of you have experienced it when you've given and how it makes you feel and what you get back. So keep that in mind for Thanksgiving. Now let's see what the market can give us. All right. How you doing, team?
Morning, Dale.
Morning,
Hey,
Coach.
how are you?
Morning.
Ryan,
Just, just,
Kman's here. Blake is here.
just before you kick off, just want to announce that we are streaming live on X or Twitter, whatever you want to call it. So you may be getting some new viewers in this morning, Dale.
Okay, well, anyone that's picking us up on X, welcome to F.A.C.E. It stands for ForexAnalytix Community Experience, and we are a community, and it is quite an experience. Jimi Hendrix had one once. Anyway, so Brian, let's start off with um, I know the yen came in lower. What kicked off the gap lower opening in yields this morning or last
It's
night?
it's Trump's pick. It dropped late Friday after markets had closed. I was just actually switching off my computer Friday evening about 11 o'clock, and headline dropped that Trump was going to pick Scott Bessent for Treasury Secretary.
Oh, that's it.
Um,
Okay.
he's seen as a bit more milder on tariffs.
Okay.
So that's one of the reasons why we've seen this gap move. The market thinking that it's not going to be as inflationary or as hard as was, we've been led to
Okay.
believe. I'm not sure. I'm not sure how that's going to play out in reality, but market's going to market, and so we've had a gap down in yields. We had a gap up in euro and a
Yeah.
lot of other pairs. A lot of them have closed those gaps already. So
Yeah.
back
Euro's the star today, uh, as exemplified by EG. Was this spike last night, or was this Friday when the announcement
yeah,
came
that
out?
was the PMI spike when euro got
Okay.
clobbered and
Okay.
everything else. Euro dollar, I think we might be going through it in a minute, but this 105 level's been holding since Friday, and
You, you know, just out of principle, I should have, but I wasn't up. It was in the night when we tagged this line, but out of principle, I should have, you know, picked up a piece. I didn't.
yeah,
Do you think this could be a major bottom? Because the way I look at the Dixie is I really can't get bearish, intermediate term until we start closing under 105.70 or so.
yeah.
But
Uh, is
maybe you can
is it
get bearish earlier.
Yeah, is it significant? I mean, that's to be seen. There's still, if you're judging the fundamentals between the US and the EU, there's no reason why
Yeah,
the euro should be bought all the way back up to 112 or anything like that.
yeah,
So it's a bit early to call a significant bottom. I think if we're back above 105, then you've at least got a potential for a bit of a short-term bottom, maybe a bit of sideways action until Trump actually sits down in January and we see what's coming. The cabinet's the surprise is all over now. Pretty much, we've got the whole cabinet.
okay.
We just don't know what he wants to do with it yet, and that's going to be the next driver. Plus, we're heading into year end and all that palaver. So Trump may take a bit of a sideline until the new year,
No
unless he
way.
starts tweeting.
Yeah, he doesn't. He doesn't know that position
Yeah, more
sideline.
chance of me growing a ponytail.
Anyway, the only that happens. He's not on the sidelines till it's over for him.
Exactly.
Anyway, want to bring Kay in. this is looking like a descending triangle to me, buddy. Even
Hmm.
though we've had a couple of probes underneath it,
Yeah.
it still seems significant. But descending triangles classically are reversal formations. Does this one have a chance to head lower here with yields?
Chance, yes.
Yeah,
It has, of course, a chance, but I'm a little in doubt regarding risk, to be honest, because we know it's a bit of a risk affair as well, the yen, and I would really love a close under that 153, 40, 60
yeah,
to call the end of the show. I I think we are going to go into with Thanksgiving this week. We may be having a bit of a messy end of month situation, um, and then we're going into the end of the year month. Remember last year, the dollar got absolutely hammered into year end. Can it happen again? Yes, it can, because if you look at the behavior of equity markets and such and so forth, it's quite possible that we see another leg of lower dollar into year end. So is there a
yeah.
possibility that we go lower on the dollar yen? Yes. But as I was saying this morning on the Flow Show, yes, there's still a month to go. We can lose 10 big figures in a month in the dollar yen. We've done that before. Um, for now, the way we are starting to range around here, looks to me, if we recall the start of the year, we were trading at 142. It looks like a quite high consolidation still.
Okay. So let's get to risk.
Mm.
New highs look like a layup, right?
Very uneven in the S&P is higher on the prospect of perhaps more gradual tariffs or not so much of a kickstart in the tariffs, more of a negotiated one. The euro is doing better because there was a risk, well, as Trump himself had announced, or his mates, that they could slap tariffs on everything European. So the euro is having a bit of a revival, but the euro is doing well on the crosses, so that's not typical for your risk on play, because usually when it's risk on, euros, the euro sterling tend to actually come a bit lower. But this is really the euro doing quite a bit better as well.
And that's not risk on to you. Euro doing
It
quite
is.
well.
It is, but it is uneven. No, risk on is actually not necessarily bullish euro crosses, but
Okay.
it is positive euro dollar, but it is positive. It would be, in my opinion, if we trade full on risk on, cable should be higher, Aussie, Kiwi, and those ones
I
should
see. Yeah, Aussie, which was the relative strength, is
yeah.
kind of holding. Um, I want to buy it around 3.5.
Yeah.
That's where I'm looking to buy it. I just want to address risk. I'll throw the old Wall Street adage at Bears Feast on Thanksgiving. Right now, it looks like there's not going to be a turkey for them, and the Bulls feast on Christmas. But I think that this chart right here holds the destiny of the whole market in its hands, and it's Nvidia, which was the old Bitcoin, right? I mean, it was a star last year, was parabolic like Bitcoin was, and I don't like the action we had after earnings, cleaning out all the bears. And even though the market continued to rally, it's heavy. And, this is what the biggest market cap or second or third, Ryan, in the market, Nvidia.
Yeah, it keeps changing, doesn't it?
Yeah, well, yeah, but I mean,
It
it's
could
up
be now,
there.
and
It's
it might
one
be
of the
now, and it might not.
it's one
Yeah,
of the behemoths, right?
yeah, it could be the biggest in 5 minutes, and then the
Uh,
smallest in 10 minutes. But
Yeah.
yeah,
Anyway, I don't like the action. I'd sell rips. Um, with the market making new highs, it's not leading. It's actually unchanged to a little lower on the day. right now. So I think this is a Houston. There's a problem because uh, you know, let's look at something that is a little bit longer term, and that was the weekly it put in last week. Wasn't quite a reversal week. Uh, I mean, because we had a blue candle, but it was an outside week and did close underneath the prior week's low, and the 9-day is holding it. This looks like drive two. You know, sometimes it only takes two, but look at this at this high on the weekly. Okay, uh, so I think that
It's
that's
it's one of these things you can look at it in two ways. Yeah, that's looking like a real ugly candle. But if you stuck a fib from that September low up to the highs, we're just in pullback territory. When you're looking at the bigger trend. So it's
oh
always
yeah,
it's a context of time frames. If you're looking at it short
yeah,
term, then yeah, it's looking ugly on the short term. Longer term,
yeah.
no, not so ugly
Where
yet.
would you buy it then? Even long for a long-term buy right here? Would you be
Uh,
long the video here?
Not right here for a long term buy. You'd want it, down around that 100.
110?
If you get, yeah, well, that
Yeah,
100, 110,
yeah.
100. We've got
Uh,
that former high going back to March, April.
uh-huh.
What was that? Just high
Right.
90s. And
So what do
then,
you think risk is going to do with a Nvidia at 100?
oh, we'd probably be, excuse my French, shit in the bed somewhere.
Yeah. Okay. So I mean, uh, that's a warning signal. So short term, at the 138 level was the low after earnings. This shows 37, but this was the earnings day, and in the aftermarket, it held 38. So you start seeing a trade under 38, or some of these moving averages. Here's 34 for the 50.
Yeah.
That opens the door to 110 in a hurry.
That
Careful out there.
130 looks key.
What's that?
That 130 looks like the key level down below.
Yeah, yeah, 130. Bitcoin's reversing. I mean, for a pullback. For a pullback.
Oh, I got a chuckle there too.
Okay. Well, I'm going to short 10 then here, if it's funny.
You
With
should. You should.
stops over the high of the move.
I'll tell you.
I'll just stay short yen. I don't. It's like I did an interview and someone was asking, where's the top in Bitcoin? I said, you know what? I don't really need to be a hero and call the top in markets like Bitcoin right now, so I could brag on X. Why don't I sell things that are already acting weak? All right. Why do I have to go be at disadvantages by selling into the high momentum? Why not sell things that are momentum is waning?
That's very
Um,
wise.
Yep.
so, but it only took me 30 years to learn it. So don't let it take that long for you guys to learn. Uh, you know, Use momentum as a guide for your preferred longs and shorts, and you don't have to be a hero just so you said, "Oh, I sold the top in Bitcoin or the day." Because if you do it a few times, you're going to delude yourself and think you could do it a lot. And you know what? You can't. All right. So, anyway, sell weakness. I think Google has big problems. I know it's news related, but, you know, it's part of the Mag 7. I don't think that the market can do well. People are saying, well, it's broadening out. It's broadening out. I don't think it could do well without uh, some of these Mag 7 stocks. So Nvidia is really the one to watch. I don't think the market's going to do well if we start taking out some of those levels that we talked about. So that's my giving part. I gave for 15 minutes. Um, how about you guys out there watching us on YouTube? What are you going to do to give today? Why don't you get by giving by signing up so that you have a great December? I think it's going to be a wild December. Okay, it's not going to be a quiet December. And then have a nice push going into 2025 to trade the Trump markets. So, with that being said, Blake, how you doing? Oh, I just wanted to ask Kman, what are you doing with your gold here?
I've managed quite a bit of it, Dale. I am going into um, monitoring mode right now.
Okay.
I think for as long as we are above 26, 35, 45
Yeah,
positive,
that right.
but
You might be able to buy it here.
I'm sorry.
You might be able to buy it here.
Yeah, I think I think we may at some stage, if we get some more of this corrective activity after the nomination of Besant, it could be that we get down there. But geopols and Israel as well apparently is on the verge of signing some form of standstill with Lebanon or so. But
Oh,
yeah, so I think there's room to correct further down into the low 26s, and then we'll see. Just keeping a small piece, just because to continue to trade the plan overall.
okay.
Yeah, that's about it.
The only other thing is I'm trying to short in WTI with a $1.50 stop because
Mm,
I still think that we're headed now. Coincidentally, I would get my measured move from 73 or even from here 71, 67. It's going to take
mm.
it to 63 to 62,
Huge
and
area down
that's where I want to buy it
there. Yeah,
down
absolutely
there.
massive down there.
Yeah, 62. And they might be signing a deal with Hezbollah, but I think I read that Iran is planning their retaliation.
Yeah,
Um,
it's not.
so yeah, so I think sometime in either probably after the inauguration, maybe before, if Iran retaliates, that Israel's going to go to Karg Island.
Mm.
And also they did, turns out later, hit part of their nuclear program. So they have a job to finish. That's going to happen. And that I think that's what could generate some type of sharp rally from here, some type of bear market rally. Um, that's it, buddy. So Blake, what are you doing with Euro up here? You just got, you say sometimes you just have to go with it. You know,
Yeah.
sometimes you can't buy it exactly where you want it, sell it where you want it. Are you skeptical?
Well, I mean, look at the economic data. I mean, the thing about all the Euro data that we got last week is it was, I mean, and what we've seen continuously is the Eurozone is extremely weak. We're at highs of the session right now. We haven't filled the gap in the euro yet, but we filled gaps like almost in every other currency because if you look at sterling, for example, um, you know, sterling basically came in, almost filled the gap, like within a couple of pips. I mean, we could have gone a little further. I mean, but just previous resistance. The Aussie filled the gap. Kiwi filled the gap as well. Dollar CAD basically filled the gap and then reversed. And so
Yeah.
now that we've done all that, the euro's, getting a lift here, and
Wow.
we're pushing above resistance. But we do have, as I think Kman was mentioning earlier. I know he's got to go here. He mentioned he had to leave in a bit. We
Oh,
have month end flows coming in, so
oh
we're
yeah.
going to have corporate month end, which could see a little bit of dollar demand sometime, over the course of the next 24 hours. Who knows when and where? The fact of the matter is that that we should see some, and so our trader is going to be using this as an advantage to sell into. I would think so, but the thing is we've seen now it's the euros is as you guys were just talking about, it's really recovering against other currencies, and that's what in the chat room. Like I'll just take you guys over to the ForexAnalytix chat room. And this is my comment right here. Euro really outperforming on the crosses, which just shows how poorly positioned Euro shorts were and are. And that's one of the conversations that or one of the things that we were just talking about, like I said in the chat room, in the ForexAnalytix chat room, you're seeing Euro crosses really recover. So Euro sterling's bouncing, Euro Aussie, Euro Kiwi. Now typically those are risk off type of indications in the market when you see those types of crosses rally. But in this case, I think it's just this. This is the F.A.C.E nomination that happened over the weekend, which, of course, happens over the weekend when like literally an hour after the market closed on Friday. I think I was in the gym when that announcement came through, or just afterwards, and so now this move that you're seeing in the markets is just a result of that. Probably a lot of poorly positioned euro shorts. So can the euro continue higher? Going back to your original question, Dale, it might. I think we could probably get up into the 105s. Now, remember, this is a lot of previous support, coming in. So this is like the flag pattern. We broke down in the flag, and we're just testing these levels right now, which I think are pretty important resistance levels. But are we going to be able to sustain these gains? I'd be a little skeptical. But I'm with you though, Dale, as far as looking to sell, maybe some dollar yen. Steve had been talking about this over the last couple of days. It was his chart of the day. You're starting to see the yen roll over a little bit, and you're seeing yields move lower too. I mean, yields are obviously gapping lower as you got with F.A.C.E coming in. F.A.C.E's friendly to Wall Street, right? That's why stocks are higher. A lot of people think that he's going to be able to help engineer the soft landing. You're going to see the bond vigilantes, if you will. All the traders that are just leaning into the 10-year. They're covering up here, and you're seeing the gap higher in the 10-year or the ZNs. So yields have come down, but I don't know how sustainable that is. I don't know if I would be necessarily buying the bond market right now. But if we are gapping higher in stocks, so it's going to be interesting to see if the S&P can actually hold or sustain above the 6,000 level, which we're at right now. This is we're closing in on all-time highs again, gapping up. But are we going to be able to make new highs? And I think that's going to be closely watched today. So anyway,
look at that chart. Put NASDAQ up right after this, and look at the difference.
Yeah, I mean it's definitely underperforming. It is, but still, is it bearish yet? Underperformance, yes, but not bearish. I'd like to see a series of lower highs and lower lows in the market to confirm that this market was ready to roll over. But here we are into year end, and we got basically another month until year end, until we get some window dressing. So where's that going to put us? Are you going to get traders that are actually doing window dressing by locking in profits after a what return does the S&P have year to date? It's a 30 some odd. Let me go to the December or January 1st, basically. You got a 30% return or 20 some odd percent return. Do you lock in profits here, or do you push it even further? Do you push the envelope?
Well,
even
for
further?
tax reasons, people will try and wait until after January 1st.
Yeah, and so I mean, we might have the S&P up by 30 some odd percent by the end of the year. So it's fascinating, but I wouldn't want to get in front of this market while we're making these higher lows and higher highs at this point. So
okay.
So anyway, that's kind of how I'm looking at it. And the euro it just finally pushed into new highs. It was struggling earlier this morning, wasn't it, Ryan?
Yeah, very struggling, and it's having a little move back above. I think the key move there this morning was as it held 105, it also held a test of the 2023 low at 104.50. That marked the low today. That was very, very significant because we obviously busted through it last week, but now things are a bit calmer. It held that low again, so that's reconfirmed the level. Yeah, if we hold above 105 now, then I think we've got the potential for something a bit more sustainable in terms of a bottom for euro dollar, and yeah, maybe a push back up to that 106 level. But if we come back below it quickly, I don't know. I think it's not out the woods yet on seeing further downside.
Yeah, I mean, we can't ignore the fact that I mean, this to me it looks like an inverted head and shoulder pattern right now, and but the gap never got filled either, so it's hard for me to be too committal at this point in time. But you're right, we're above 105, and you start looking at what a recovery would look like in a situation like this. Let's take a look here. We're just above the 618 retracement at 105.06. So it looks like, 105.50 is doable, which, there's a lot of resistance up here, previous resistance. And like I said, we are heading into, a month end where we might have corporate month end buying coming in, maybe even a couple of days early because of the Thanksgiving holidays. So that's another factor that we need to be thinking about at this stage in the game. But yeah, anyway, big move in the euro, and I'm not too sure what to make out of it. I mean, I'm short euros, but I'm short like right around here. This is where my cost average has been, and obviously, seeing all the other crosses, not crosses, so to speak, all the other majors really fill their gaps, and the euro didn't. It just shows you how strong this is. Probably so many people are short the euro and have been short the euro that this is just your good old fashioned squeeze at this point in time. But I noticed we have Steve here at this moment. So Steve, do you have any comments about what you're seeing in the FX market this morning?
Good morning.
Good morning.
As you know, I'm paying very close attention to the USD yen, which shows more signs of weakness today. We also seem to be having a decent reversal in the dollar in general, which comes from an also quite important level. I'm tracking an ascending channel that has defined the move higher, but it's the very beginning of the week, the very beginning hours of the week. So, I'm going to wait to see how we close the day before I can draw any conclusions. I mean, at some point, we do have to see some kind of a rebound, from several of, the currencies that have been battered against the dollar. I don't know if this is going to be the beginning of that, but it might as well be. I don't think, though, that even if that's the case, that we're looking at some kind of a trend change or some kind of a game-changing dynamic. I think it's going to be a counter-trend move.
You think this move that we're seeing in the euro right now is a counter-trend move?
Yeah, until proven otherwise, we should absolutely treat it as one. Yes.
Yeah. I mean, it is. I mean, it's undeniable right now how weak the euro, the eurozone economy is comparative to the U.S. economy. But I guess the question is, are we going to start seeing weak economic data in the U.S. economy? And we have a lot of data coming out this week. If you look at the calendar, especially on Friday, on Wednesday. Wednesday we have PCE, durable goods, GDP, data coming out. Initial jobless claims are going to be a little bit early too. So I think a lot of focus is going to be middle of the week, just before the holiday. But there's other stuff that's happening before that.
Yeah, don't forget, it's not just about the economic data, right? At the moment, there are political developments, not positive ones, out of the EU, and some big question marks that need to be answered. We have political changes that should be coming up in Germany. even in
Everywhere.
the UK, it is in some kind of a turmoil, although it doesn't belong in the EU anymore. While on the other side of the Atlantic, in the US, we have very positive. The market believes we have very positive prospects. Trump got elected, and the market clearly believes that Trump is the more, let's say, favorable to get the economy boosted more. So until Trump takes over and some months pass, there is the hope trade in the US, which we do not have currently in the EU, right? So that is also definitely playing a role in the dollar being well bid.
Yeah. And, I was just looking at the 2-year differentials. Obviously we're seeing a little bit of a recovery here in the European 2-year over the US 2-year, but not enough to elicit this big squeeze. We're just getting a squeeze, really.
And nothing moves in a straight line, right?
Yeah.
We're definitely going to see. Any trend has, right, its pullbacks. And as I said, I think we might be at the beginning of one of those pullbacks. But as I said, I wouldn't be reading too much into it. I don't think it's likely to last more than a few days.
Yeah. Well, this has been a big move. You look at the euro right now. The euro's up 108 pips. That's a pretty big move for the euro as it is. So real nice recovery here. Ryan, I'm sorry. I just realized that this is time for Dale's interview. Dale, I'm sorry.
Yeah, that's okay, buddy. I know. Wait till Thursday when you have all that tryptophan in you.
Oh, yeah. You know what? My tryptophan.
Oh, you're going to be in Del Mar.
I will be. My tryptophan will be on the road, so we'll see.
Yeah, nice. Carly, I'd like to promote you. I'm trying to, because I'm going to make you president of ForexAnalytix.
There you go.
That's your promotion. And then you have to introduce us to Jim Cramer so I could say booyah to him. Okay? Is it a deal?
Sure, deal.
All right. That's all I want for Christmas, Carly, is to be able to say booyah to Jimmy. All right.
Maybe we can make that happen.
All right. So what other setups going into this holiday, big move in currency, S&Ps near all-time highs, bonds.
There is no shortage of things to talk about. That's for sure. Let me just see if I can get, I'm on a new computer. I forgot my defaults weren't set up. Let me get this going here.
Okay. How have you been?
Good. Not bad at all.
All right.
Busy.
Yes.
Yeah, it's a good problem to have.
Yeah, it is. Yeah,
okay.
Some bull markets and metals helps and things like that.
Yeah,
right?
Actually, we're short. We're short gold. I have some stories about that. It's been, there's no easy money in these markets. That's for sure. All right. So
that's all I make is the tough money, and then I get out.
Right, of course.
And then the windfalls happen without me. But
exactly.
That's my
paradigm. Right. So I'm going to start, if it's okay with you, I'm going to start with the currencies,
sure.
Just to kind of expand on the conversation your other panelists are talking about. So okay. I have a little bit different view, and I obviously the only thing that's going to determine who, only time is going to tell how this works out. It's very uncertain. But what I'm looking at is there's two things. The dollar index futures contract has reached our upside target. And when I look at seasonality in the currencies turns right about now. This is a euro chart. This is based on futures data over the last 26 years. You can see, hopefully you can see that right there.
Yeah.
And normally the euro bottoms out in late November. Here we are in late November. For me, the chart setup looks pretty promising. There's no guarantees. Maybe we just roll right back down and keep going lower. It's hard to say, obviously, until we know. We don't know. But seasonal low in the euro and the top in the dollar is basically generally occurring right now. Let me show you my dollar chart. So this is the chart we've been working on in the dollar. It's a monthly chart. It looks very boring because we were just trading in this range. I think the top of this range is going to hold. 108 is what, we've kind of, that's kind of been our idea all along. Now, if we're wrong and it breaks through, nothing stopping it until we get up into the high 118, 119 area. So that would be really interesting if that happens.
That's a crisis.
That's a crisis
move.
That's
okay.
a problem. I do not think that's going to happen. I think, honestly, I think that, I mean, we'll see. I think the dollar probably topped out on Friday. That's my best guess, but we'll have to just kind of see how it goes.
Okay. You have some nice downside targets if we break 100.
I do, yeah. So I mean, we've been in this range for a couple of years. So, and if the last time that Trump actually have a box here, a lot of people are talking about the Trump trade, which is, the assumption is it's bullish the dollar, it's bearish for treasuries. But the reality is, like, that's really not what happened last time he was in office. I know there's a lot of things going on, COVID, but here's where the dollar was when Trump came into office, and it mostly was sideways to lower. This is where it was when he left, but COVID did throw a wrench in that.
Okay, so sold off as he entered office, and it's in the same position now.
Yes. So we're coming in on a high note, exactly like it was last time around. So my best guess is this is probably the highs, and we probably maybe see a repeat of what we saw the last time he was in office. Now, again, don't know until we know. I think I have something similar here in bonds. You can see the same thing. The assumption is Trump must be, inflationary because of tariffs, but the last time around, he really wasn't. He came into office right around here. This is about 3% in the 30-year. Rates went down a little bit. Now, if it wasn't for COVID, this is the big COVID spike here, we probably would have literally gone out right around where he came in. So he wasn't really, he didn't, I mean, not as much. It's hard for me personally to justify 4.6, 4.5% when last time he was in office, we were way up here. I know there's all kinds of different things. It's not apples and oranges, but I'm just saying, I'm not sure the narrative is right. I think it's wrong, is my guess. So I think all these Trump trades are going to end up being unwound.
Okay, well then that means that it was a buying climax in the market.
Yes, I agree. Yes,
but we're at I mean, NASDAQ and S&Ps are kind of like, I mean, really NASDAQ is lagging a lot. What do you think? I mean, that's part of the Trump trade. I've talked to people who say that was a buying climax that we had. What are you thinking?
Right. I think we're getting really close. I'm sorry, for some reason it's not allowing me to pull up my other windows. Let me see if I can. There we go. Sorry about that. Okay.
That's okay.
All right. So I've got a few actual commodities that maybe you don't talk about too often that we can take a real quick look at. But I do agree. Let me start with. I apologize. Let's go back to the S&P while you're talking about it. So seasonality in the S&P is bullish, mostly through the holidays. Almost every year, even during the financial crisis, it mostly went up during the holidays. That's just how the markets are. So while I think the market kind of priced in the Trump victory in advance, this is the S&P monthly chart. I think the odds are we probably extend that and kind of melt up. I'm looking for about 6170, 6200, somewhere in there. But this feels to me so much like 2021, where we did just this. We melted up during the holidays. This is a November bar. This is December. And then come January, we rolled over and it was a pretty tough correction. I personally think we're going to get a repeat of that. So that's what I'm looking for. A little higher, cool. And then I think we're at risk.
Nice look. Okay, you could go to cotton now. Okay. Was it cotton?
Yeah, that one was cotton. Yep. So
I like that.
Yeah, so cotton's a market not everybody follows. The thing is, cotton's only been below, right? This is July cotton, by the way.
Okay.
It's trading at about 70 cents. The front months are trading in the high 60s. And the reason that's important is cotton's only been below 65, 66 3 times in the last like 3 decades. And it was during COVID, which everything, got shellacked, during the financial crisis. And also there was a commodity bear market in 2016. So it's only been below these levels 3 times. And those were historically troubling times. We'll just put it that way. So it's very likely that the cotton prices, any dip down into the high 60s or 70 areas a buy. So what we've done with our clients is we've put on risk reversals where we sell puts, buy calls, just to get in the game. Again, I just said cotton hardly ever goes below 66. So there we go. We're selling a put there. We think that's a pretty safe bet, unless unless we get World War III or something really crazy happens. But statistics are pretty good for cotton to go up from here. Another thing that people may not be looking at that we've got going on. Oops.
Corn. Oh.
Oops, that was the wrong one. My bad.
That was Ethereum, right?
Actually, that was another. That was coffee is really starting to move. Yeah. So the all-time high in coffee is about 330. We're right around 305 right now. I do think we probably go a little bit higher, which is why we've constructed call ladders. I don't know if your followers are going to have ever done a call ladder. It's a strategy where
a ladder.
A ladder,
right.
yes. Yeah, so we're basically trying to use the market's money to buy a call option, but it's not without risk. This particular trade we put on, we collected a penny and a half, which is like $500 to $700, depending on, everyone gets it at slightly different times. But what we're trying to do here is we want to be long, but buying this option outright would cost you like $5-6 grand. So instead of paying several $1,000s for an option that's has all this volatility built into it, and it's going to erode quickly if the market reverses, we sold 2 calls above, which is a little scary because our risk is higher. So like if we're too right and the market just keeps running, kind of like what Cocoa did last year, that's where we get into trouble. But a position like this is pretty awesome because the only way we can lose money, because we were able to execute it as a credit, basically we sold more premium for these 2 calls than we used to buy this call.
Right.
The only way we can lose is if the market is above 350 at expiration, because how it works is we're making money from 290 to 310,
right,
above 330, which is where our short option risk is. We give this money back all the way up to 350s where we run out of money. So coffee's never been that high. So the odds are pretty good. And if we're real lucky,
Bitcoin, Carly.
It does. It's a lot, to be honest. It caused me a little stress over the weekend because I started thinking about what Cocoa did last year. And even though the odds are on our side, it's still, there's no free lunches for sure. But if at expiration we're somewhere between these 2 levels, which would take a lot of luck and timing, and I'm not saying there's some luck to some of the stuff.
Sure, I'm not against luck.
It would, me neither. I'll take it. It would pay off as much as $8 grand because it's 7,500 for this call spread, plus what we collected. So it's a very high reward, potentially high reward, very high probability type of strategy. You don't want to do this kind of thing in a normal market. You want to do it when prices are exploding. Let me show you what coffee looks like on a monthly chart.
Wow.
So daily chart looks pretty tame. It's not tame at all. This is a really wild move. And I think we probably run up here and test these general areas, basically new highs, run the stops, that sort of thing. So that's going to be interesting.
Yeah. Nice. You doing anything in grains? Oh yeah, there you go.
Yep.
March,
yeah. So I'm short-term bearish the grains. I feel like we're the seasonality is really off the mark in grains. Just there's been a lot of weird stuff, like the crazy bull markets caused a lot of farmers to hold on to grain a lot longer than they should have. Like instead of selling at harvest, like what would normally happen, they were hanging on to it. Yeah, they don't want to sell it. A lot of farmers look at $4 to $4.50 corn is too low. They feel like because their input costs were high, they feel like they're owed more, and
so they're going to get squeezed and puke.
Yeah,
right.
I think that's what's going to happen. I hope not. Farmers are generally very good, nice, honest people, but the reality is you can't tell the market what you want. The market tells you what you get. So unfortunately, there's a lot of them hanging on, and I think we're probably going to kind of melt down. I wouldn't do anything unlimited risk just because of the weird environment and seasonals. But you can see this is a trend line. It held the trend line. So our clients are just long puts with some time on it. Also going into the holidays. Yeah.
How far out? March?
These are March. So I think about 90 days at this point. Yeah. Something to keep in mind in the holidays is you don't want to have too much risk exposure, just because I've seen some really just stupid things happen over Thanksgiving and Christmas for no reason, really, to be honest.
Yeah,
fundamentals
it's a
just
good
don't matter
reminder
sometimes.
for people. That's a very good reminder.
I've learned that lesson too many times that I want to talk about.
How many times do you have to get hit in the head with a hammer to get
exactly it? Well, I'll never forget. I can't remember. I think it might have been 2014. I could be wrong. It might be somewhere in that ballpark. We had some downside crude oil exposure, and there was an OPEC meeting that landed exactly on Thanksgiving, and the CME opened oil for a couple hours just because of the OPEC meeting or something. It was, the details are kind of fuzzy, but what happened is oil gapped down like $9. So
Merry Christmas.
Yeah, it was awful. So we're also playing the downside in hogs, again, another market that a lot of people probably aren't following.
Right.
Hog prices are relatively high. We're going into a seasonality period that's bearish. Let me see if I can find something that might be a little more relatable here. This is a 10-year note bond chart. This is what we're looking at. I kind of showed you with the 30 years, so I'm not going to spend a lot of time on this, but I believe we're in the bottoming process in bonds. We saw very similar. I mean, this is a lot messier and choppier, but there's a lot more government interference going on here. There's a lot of things happening here that weren't happening in the financial crisis. But if I had to take a bet, basically it's as simple as, actually, let me show you. I have a chart that might be a little better. Let's look at this one. It's really, in my eyes, it's really this simple. In the long run, in the short run, things get chaotic and narratives take over and things happen. But this is the really big picture of stocks and bonds.
Yeah.
The red line are 10-year note futures. Obviously, the green line is the S&P.
Yeah.
And you can see that we always kind of come back to this type of center line. Everything reversion to the mean. We're just out of balance. Bonds are probably, in my eyes, bonds are too cheap. Stocks are too expensive. It's not something that happens tomorrow. Like sometimes it takes several months. We've been looking at this chart for months, so you can see nothing's really happened yet. But if we're talking 5 years, maybe even, there's a really good chance we see these lines come together. Yeah, they always do.
Nice look.
Yeah.
Very interesting look. Okay. I mean, okay. Go ahead. You have some gold stories to.
I'll just real quick.
All right.
So we started getting bearish gold right around here, around 2650, 2700. And the reason we did that, I'm going to just show you a chart real quick here, is we've been working off of this monthly chart. And you can see there's a really obvious trend line here. The market poked above it, which caused us a little bit of stress because we had that trade on that I was just showing. Let me pull it back up. So we were a little early to try to play the downside in gold, and this stressed us out a little bit here on this big spike. So in the reality, we had a pretty good position on. We used the market's money. We sold the call, we sold the put, we bought a put. We were in a really good spot to make money on this downturn, and I screwed it up because I got a little nervous when we started pushing 2,800, and there was just no sellers. It was a seller strike, and it got a little bit scary. So once we saw this big initial break in gold, we sold a put. We sold the 2,600 put. Let me just rephrase that. So we actually bought this put back, took a profit, resold the 2,600 put, which was right here. And we were basically holding a limited risk credit spread on the downside and short a call. And everything was doing fine, but then we sold some micro futures against it right here, which turned out to be a really big mistake. So it's just a good reminder. Sometimes you can be right and still lose money. Yeah.
Yeah, right the market, wrong the trade.
Yeah, and the thing is,
experienced it.
Oh, for sure. In hindsight's always 2020, but the thing is, if you don't hedge and it keeps going, you're toast. You can easily blow out an account. So darned if you do, darned if you don't with this type of volatility. These are really big moves. I mean, from 28, we're talking like $25,000 moves here. So
what are you thinking from here? Back to 25?
I do. I honestly, I think we're, let me go back to my other chart.
So a weak dollar and weak metals, people probably have a hard time,
Yeah.
you know.
It's definitely different. It's for sure different. But the dollar and gold are correlated right now. It's it doesn't make a lot of sense for, you know, historically, but that's really what's going on. I actually think we're probably eventually going to see 2150. Seasonality in gold is bearish for the next month or so, and then it kind of stabilizes. But I don't think seasonals are going to stop the down move once it happens. I think we're repeating. This is 2011. You can see pretty similar, you know, kind of last hurrah rally to what we're seeing, and I think eventually it plays out and we start just melting down. So
okay,
that's my opinion.
All right, that'd be nice. Probably back up the truck move if we get down there.
Yeah, oh, for sure. If we get down like somewhere around 2150, which is basically, that sounds
breakout.
Right. Exactly. It sounds impossible when I throw that number out there. People think I'm totally insane, but we were literally just there like in April. So it's not that insane. We can easily go back and retest that. And gold is, I mean, look at this gold chart. You can see gold is really known for ramming it to the longs every once in a while. And I think that's probably what we happen.
Oh, that in silver, I heard that some guy called Slammy Whammy.
I haven't
Have you heard of him?
I won't.
Oh no, Slamming Sammy comes in and you know, it's just probably JP Morgan. Anyway, I really some great looks again, Carly.
Sure,
really appreciate you coming here, and
no
hope
problem.
you and your family have a great Thanksgiving, and thanks for your giving of coming here for every 3-4 months to share your hard work with us.
Of course. Thanks for having me.
All right, Carly Gardner, and the best way for people to follow your work, and Carly's an options broker. She does options on futures, which are, you know, you could tell she knows different strategies that you could learn, credit spreads, etc. There you go.
Yep. Well, thank you. Yeah, if you want more information, or if you want to sign up for a free trial of our newsletters, you can see on our website, there's a button right here. You can sign up and you'll receive a lot of the analysis that I've been talking about, at least for the next couple of months. You can follow along, see if you're interested. It's decarleytrading.com, DECARLEY trading.com.
And Carly's written some books. Let's see those books that you've written.
I have written some books. If I scroll down here, sorry, there you go. I've written more than this, but don't worry about anything else. These are the newest and latest and most updated. So if you're interested in learning, some of the option spreads that we talked about today obviously are covered in detail in Trading Commodity Options with Creativity. And if you're looking for just market analysis, seasonality, chart stuff, higher probability commodity trading is probably a better bet.
My trading warrior sister, Carly Gardner.
Thanks, Dale.
All right, thank you, Carly, and really appreciate some great looks and a dose of sanity for, you know, people looking for insane moves, right?
Yeah, exactly.
All right.
Thank you.
So you're very welcome. So that's a wrap, everyone. People thanking you. They enjoyed it, Carly. And you guys know where to find her, and you can find her on X under her name. Okay. And great views from Dan. Everyone enjoyed it. You could join the team in about 17 minutes on the Morning Edge. It is a shorter week, and think about that word Thanksgiving. Okay, it's gratefulness, and it's also giving. And we're going to give you a couple more days this week, and probably Friday. Ashish, nice to meet you. All right. Adios, everyone. Don't just count your pips, count your blessings. See you for Turnaround Tuesday. You're very welcome.